Hey, folks, my guest today is Joe Herkin. He's building Issuu.com. That's Issuu. Create once, share everywhere. He's got more than 20 years of tech sector experience and has a proven ability to successfully lead companies from the startup phase to IPO and beyond. He joined the company in the fall of 2012 and brings significant Silicon Valley experience to the role, having led executive business development and product leadership roles at other companies backed by major firms. All right, Joe, you ready to take us to the top?
Sure.
Tell us about Issuu. What's the company doing?
Great to be with you again. Nathan, we were talking about the last time we were talking was 5 years ago.
Isn't that crazy? World has changed.
It's yeah, I think last time you called me and did an audio Skype or something.
Yes.
So, so Issuu is we're this massive digital publishing platform. We enable marketers, businesses, content creators to make their content materials available digitally in all the different formats that they need that content to be available in to reach their audience wherever they are. So if you have a catalog, a brochure, content marketing materials, collateral, you're able to create that once, upload that into Issuu, and then we help you transform that into everything from a full-on video and link enhanced paginated version that can be embedded on your own website or shared across any social media platform, turn it into a GIF, that content into a GIF so that it can now be embedded in a MailChimp email, which now makes your MailChimp email much more vibrant and engageable and better click-throughs. You can turn it into an article or a visual story. So now it's optimized for mobile screens and can be shared as a story on Apple News or a visual story on Snapchat or Instagram or.
Come on, Joe. I'm waiting for you to say turn it into an NFT, but you didn't say it.
Yeah, and the NFT market is, I don't know if you want to go there, but the NFT market is a super interesting one, and we're trying to figure out what the right move is there. I think it's one of those markets that's getting a tremendous amount of attention right now. We are about making sure that we're providing value for our customers in the ways that they want to be reaching their audience. And if NFTs are one of those, we'll certainly explore that. Our focus right now is businesses being able to tell their story to their audience, wherever that audience happens to be.
Okay. This makes total sense. And so give me a general sense here. What is the average business sort of paying you to use the Issuu suite of tools?
Yeah. So we cater primarily to SMBs. In addition, it's groups at large companies. So everybody from folks at Shell to Patagonia, the Miami Dolphins use us. In all those instances, it's groups within the marketing group or the HR group that's using us. Our largest set of customers, we've got over 1 million customers. We're a freemium product. Over 1 million folks are using us. It's everybody from those large companies I mentioned to real estate agents and restaurants and solopreneurs and commerce companies that are selling products. The base product that most people are paying us for is $500 a year. Okay. And with that, they get a whole set of tools and services that enable them to take the content that they have and turn it into all the right assets they need. The super interesting thing about what we're doing now that's where we've evolved quite a bit in the business is that the ecosystem has evolved a lot, right? So even 5 years ago, digital meant you had a piece of content, you put it onto a website, and you got access to the web by buying it through WordPress or Squarespace or GoDaddy or one of those. Now the web is just one of dozens of channels where you, as a marketer, as a business, need to make your content available. And the bulk of those channels, Pinterest, Instagram, LinkedIn, et cetera, are requiring you to create natively for that platform. Mm-hmm. And every time you have to create natively, you're creating from scratch, and it takes a massive amount of time, huge amount of effort, and often people don't have the expertise. So what we are doing is enabling you to, again, create that content once, leverage us to get it onto all those different platforms. So indeed, you can take advantage of the digital world in ways that's transformed. If you are selling knitted hats and you make those in Perth, Australia, your market used to be farmers markets in Perth, Australia. Now you can take those assets, create a catalog, turn that into a range of different other pieces of content, share that across every single channel, and
Joe, makes sense. So how many Etsy's, National Geographic's, Hyatt's use you? Not free, they pay at least for one seat. How many brands?
So we've got, as I said, we've got 1 million folks who are using us.
Well, that's users though, paying brands.
No, paying brands. 1 million.
Oh wow, you have 1 million paying logos.
We have 1 million brands. They're not all paying. It's a freemium product.
Okay, how many? That's what I'm asking. How many
Okay.
paying?
So we don't reveal how many paying, but it's in the high double-digit thousands, right?
Okay,
Tens of thousands of customers are paying.
When can you break 100,000 paying customers?
We expect that'll happen relatively soon.
Like next year?
Probably.
Interesting. Is that an important metric for you guys, or is that not something you're looking at?
No, the important metric for us is there's sort of two key metrics for us, right? One is customer engagement. Are they using our product? Are they getting real value? At the end of the day, the revenue we generate from customers is a proxy for the value we're delivering to them. We want to see those folks building their business. So it's really customer engagement. How are they using us? Are they using the tools we're making available? We monitor that carefully. The second, of course, is paying customers. Absolutely, it's a key metric because it's the thing that enables us to understand that we're running a good business. It's also, at the end of the day, the thing that keeps us in business. I'm a huge proponent of what I like to call the pro-grow, profitable and growing. So, we've looked at running Issuu as a business that's growing nicely, and also for most of our tenure, for most of the last 6 years, we've been a profitable business.
And what is nicely growing? Last 12 months, you're talking 30% year over year or something else?
Yeah, we're in that range.
Okay, 30% year over year growth. That's great. And where is most of the growth coming from? Expansion on current logos or brand new logos?
Brand new. I mean, we get them from all over the world. The U.S. is a fast grower for us.
No, but what's the go-to-market motion, Joe? I mean, is this a paid advertising? It's freemium, obviously, but
got it. Yeah. So it's a range of things. One is we've been an established brand and known as a company that's super valuable in this space for many years, and so there's a lot of word of mouth and organic growth that happens. We spend a little bit on SEM, less than a few $100,000 a month on SEM. Okay. We have strong SEO. We have customers. Part of our business is that when you leverage us, often you're making your content public, and so other people in and around your space see that you're getting so much value from Issuu, so they come to us, right? Yep. Increasingly, what we're finding is, we're marketing in particular categories. So, we've seen huge growth in restaurants using us, right? All of a sudden now in the last 2 years, everybody needs to read a restaurant menu online in a digital format. We provide really good tools for that. We're seeing increasingly businesses that used to require in-person handing out of pieces of information are now using us for digital experiences. Conferences, huge growth for us. And
Joe, when these folks are signing up, again, like the Hyatts of the world, you said there's many tens of thousands of these logos using you. On average, I mean, the Weaver in Perth, Australia, I imagine is 1 seat usually, but I can imagine National Geographic is like 60 seats. On average, what's the team size using you?
Yeah, it's probably in the 5 to 10 team size.
Okay. That's sort of what I was expecting.
But the other piece that we have of our business is Issuu.com, which is the consumer discovery site. So we have 100 million uniques a month who are consuming Issuu content. Half of that happens on Issuu, half of that happens wherever that content is being distributed. So that, by the way, is another part of our flywheel. It's another part of how our customers come to find us. So we may find a real estate agent is looking at a catalog for furniture on Issuu, and she realizes, wow, I can actually start to create my real estate brochures on Issuu as well. So it's a lot of people engaging in the experience and then using us themselves.
Yep. And just to be clear, when you mention these brands are paying you with an average of 5-person teams, they're paying $40 a month for the whole 5 teams, or they're paying 5 times $40 a month?
It depends on the plan. So we actually have essentially 4 tiers. There's basic, which is they're not paying us. It ends up being ad supported. There's starter, there's premium, and then there's optimum. You get seats with each one of those tiers. So you get up to a certain number of seats per tier, and then if you want more seats, you upgrade.
I see. What's the cheapest on a per seat basis? What's the cheapest I can drive that if I sign up for a big number of seats?
Again, the biggest plan we have is optimum. You get 25 seats, and if you need more than that, we'll sort of do things custom for you as well.
What would I have to pay to get 25 seats?
It's $3,000 a year.
Oh, okay. So that's a bit of okay, got it. So that's a discount off the $40 a month.
But what it is you also get a range of other tools, right? Yep. So we package it. We don't focus on the seats as much as we focus on the tools that are available within those tiers. So you get access to, unlimited unlisted content. You get access to additional data and statistics. You get access to a different level of customer service and those sorts of things.
No, my point though is, Joe, is people can use you without having to keep paying that $40 a month per seat as they scale.
Indeed.
$3K per year for 25 seats. What is that effectively? $10 a month per seat, right? So there's economic advantage for being bigger.
Indeed.
Okay. Makes good sense. Tell me more about the team. How many on the team today?
So we've got about 120 people.
Okay.
30 of those are in the US. The rest are split between Copenhagen, Berlin, and Braga, Portugal, where we just opened there. And we've grown, throughout COVID, throughout the last year and a half, we probably hired 50 people. We just raised $30 million, and we're going to plow that into, growing the team.
Why'd you raise that? That's obviously a big decision.
Yeah. So we raised it because we see the market is massive, and the opportunity ahead of us is massive. We've seen, there are tens and tens and tens of millions of businesses. All of them are creating marketing collateral, brochures, catalogs, need to be able to tell their story. And we're finding, we wanted to raise that money to be able to reach them more effectively than we have been. We also raised that money to be able to innovate pretty dramatically against the product. So we'll be bringing on additional engineers and developers, as well as marketing folks, so that there'll be a whole additional set of tools and services.
What do you consider this? Is it Series B, C?
It's a C round. It was a debt financing, so which was great for a company like us. We're essentially a profitable company.
All of it was debt. $30 million.
All of it was debt. Yep. And the way it works is, there's essentially no dilution, so it's really good for the team and really good for the company.
No warrants.
Very little dilution.
Okay.
Yeah.
Sub 5% warrants.
Oh, way sub 5%.
Okay.
Wait. Yeah. I mean, like, not even
sub 1.
Yeah.
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 Okay.
Yeah.
So that's what you mean by dilution. But how's it work? 4-year payback, interest only for 4 years?
Yep. Pretty standard. A really good partner we're working with, Capital IP, and we're excited to have it. It really helps us.
Why does Capital IP do this? How do they make money on this if they don't get any equity?
So they get a little bit of equity. They make, it's an interest only loan. They make money on interest. They make, they see it as an investment. They have LPs themselves. They see it as an investment, and they make their money on the interest. They make a little bit of money on the warrants. They make, there's certainly some additional relatively small fees that are associated with it as well.
Mm-hmm. What interest rate are they typically targeting across all their portfolio companies?
I don't know what they're targeting, but I think loans in this nature are sort of in the 9 to 11% range. Probably some are paying higher. Yeah.
Got it. That's a lot of debt. I mean, usually you don't see that amount of debt coming to the company unless you just raise a big VC round and there's no cash sitting in the bank. That is, I imagine that's flirting with like 1x ARR basically, right? I mean, something like that.
We took that debt because, again, we see this massive market. We're seeing,
I get that, Joe. I get that. But how did you get them comfortable with it? That seems like it's almost 1x your total revenue. It's a big slice of debt.
They're comfortable with it because of the growth, the growth that we've had, the growth that we see ahead of us, and the market that's happening, that's sort of unfolding in front of us. They're comfortable with it. You look at other comps in our space. You look at Canva. Canva's now valued at $40 billion. You look at
what would you value Issuu at today?
Oh, I don't know. I mean, the market will determine that, right?
Yeah, but I know, but what's based off what like what would you put, or range would you put on it?
I don't know. We're certainly in the high hundreds of millions of dollars, probably more, depending on who's doing the valuation and where things are going. I don't focus that much on valuation. I think valuation is sort of a red herring in a lot of cases, because valuation is simply whoever is doing the valuation has their own context for doing it. What I'm focused on is, again, are we in a massive market? Is there huge scale? Can we deliver great value to these customers? And if we're able to do those three things, we have a choice ahead of us. We can go build and grow this business. We can go acquire companies. We could be acquired, but our focus isn't on any of those things right now, though we are looking at potentially acquiring companies. Our focus is real growth and building out the market and the opportunity ahead of us.
Mm-hmm. If I take those 40,000 customers times 5 per seat on average, that's 200,000 sort of paid seats, right? Obviously, at scale, people can get Issuu for as cheap as $10 a seat. If I multiply, obviously, 200,000 paid seats by 10, that's like $2 million roughly in MRR, or $24 million in ARR. Do you guys see a path to breaking sort of $30 million in the next 6 months?
So that's not our revenue. we have a range of other revenue generation aspects of the site as well. We sell advertising against those customers who are using the basic package. We sell advertising against that. But yeah, certainly we will be well over those numbers. We already are over those numbers.
But just to be clear though, pure SaaS business though, those are about right.
You're in the neighborhood, but we don't reveal the specifics, but you're in the neighborhood.
How do you think about like last 12 months revenue split between SaaS versus ads, and how you divvy up the 100 people, 20 people on your team, like working on each one?
Yeah, the bulk of everything is SaaS. Our business is, and even on the advertising front, we see the advertising as a fourth SaaS tier. The customers themselves aren't paying, but it's advertisers are paying for their use of the product.
Okay, so is it fair to say more than 80% of your revenue is pure SaaS, traditional SaaS? The others call it ads. That's the majority.
It is, but we do have some customers who are, all the numbers that I gave you are averages. We have customers who are certainly paying more, have larger, we have larger partnerships in place with some of them. We also have integration partnerships that drive revenue. So there's a range of ways that we're building and growing out the revenue.
And if you think you're sort of going to grow 30% this year, so between 30 and 40 million bucks in revenue, that means basically a year ago you were caught between sort of like 25 and 30-ish, something like that, for 30% year-over-year growth.
In that neighborhood.
Yeah. Okay. Fair. Any new product lines coming out we should know about?
So one of the big things that we're focused around is integration. So we've rolled out early stages of it, but integrations with Hootsuite, MailChimp, Dropbox, Google Drive. So we're focusing a lot on providing our customers easy integrations with the other products that they're using in what I like to refer to as the Story Cloud. So the Story Cloud are those sets of tools that businesses are using to tell their story in the digital world. So a huge focus around those integrations. We just rolled out early stages again, a set of tools around creation. So templates, you can now come to Issuu if you haven't created somewhere else. You can now come to Issuu and start creating directly with us. We have templates for restaurant menus and catalogs and real estate agencies and a whole range of those sorts of capabilities. And that's we're starting to see some really nice traction on that side of things. So,
all right, Joe, let's wrap
those
up
are
here.
biggies.
Wrap up with the famous five. Number one, favorite business book.
Favorite business book is what is my favorite business book? Ben Horowitz's book, which I'm all of a sudden forgetting the actual title.
Hard thing about hard things.
Hard thing about hard things. That's my favorite. I like the actual anecdotes and the stories that are in there. It's real stuff.
Number two, is there a CEO you're following or studying?
I'm probably following the one that everyone's following, Mark Zuckerberg, for good and bad.
Number three, what's your favorite online tool for building Issuu?
Favorite online tool, we use Figma a lot.
Why do you like them?
Just super easy for our creatives to share, to create and then share what they're creating with everybody.
Do you think you'd be able to sort of grow to where you're at today without something like Figma?
Yeah, I mean, we've used other tools as well. It's one that's super efficient for us.
What did you use before them? Well, you switched to them, I guess.
We were using, Miro. We were using Adobe tools. We're using, a range of different things.
But all in on Figma now, huh?
Primarily, yeah.
Nice. All right. Number four, how many hours of sleep do you get every night?
Not enough. 5 to 6.
Okay. And situation, married, single, kids?
Married, two boys.
2 kiddos. How old are you?
How old am I?
Yep.
51.
51. Last question, Joe.
I'm an old dude.
No, you're not. What do you wish you knew when you were 20?
What?
Something you wish you knew when you were 20.
Perspective.
Guys, there you have it. Issuu, helping you create content once and use it 1,000 different places to just squeeze a little extra return out like as you can. They've got over 200,000 paid users on the platform across over 400 different logos. 4,000 different customer logos, scaling nicely. Just raised 31 million bucks in debt to look at potentially doing some acquisitions, things of that nature. Been pretty capital efficient today, going after Joe's sort of pro-grow model where you're growing nicely 30% year over year, but also profitable. 120 people on the team right now as they continue to scale. Joe, thanks for taking us to the top.
Absolutely. Thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.